Hey, it's your realtor friend Kristen here, and I am at the Heritage Model Home in Indian Trail, North Carolina. I have my friends with me today, Neil and Derek, who are going to educate us on reverse mortgages. Neil, can you take a moment to introduce yourself?
I sure can. Neil Gelbert with Fairway Independent Mortgage out of downtown Matthews. And I've been with Fairway now just about 2 years.
Hey there, I'm Derek Helms with Fairway Independent Mortgage as well, and I've been with Fairway for a little over 5 years now, and I'm actually from the area, so I grew up in Union County. I've been in Matthews with family my whole life, so glad to be here.
Well, thank you both for coming in today. And I know a lot of people have questions about reverse mortgages, so I'm just hoping today's video can shed some light and give some clarity to people on their value. So be sure to subscribe to the channel. Don't forget to like and share, and make sure you hit the bell so you don't miss out on any real estate content. Let's go ahead and get started. The first question I have today, we hear a couple different names. We hear reverse mortgages, we hear the HECM. Are these words interchangeable or do they have different meanings?
That's a great question. So, reverse mortgage has been around for a very long time, but there are other names that are used and used differently in the market. And you will hear HECM, and a lot of people will say, well, what the heck is a HECM? A HECM is home equity conversion mortgage, and more popular right now is the HECM for purchase. And most people don't understand that the HECM for purchase is exactly that. It's for folks to buy homes with the use of the reverse program. A reverse mortgage is strictly for someone that's staying in place and maybe doing a remodel or what have you, but it's the H for P that is now the most popular in the marketplace.
Fantastic, thank you. Now, is there an age requirement in order to qualify for a reverse mortgage, or are there other requirements that we should be aware of?
Another great question. Yeah, so one of the two borrowers or one of the borrowers must be at least 62 years of age. The other requirement is that you have to pay your taxes, you have to pay the insurance, the monthly insurance, and you have to live in the home for at least 6 months out of the year. It's very similar to a regular forward mortgage, and but as long as you can follow those basic requirements, the qualifications are pretty easy compared to most other mortgages, as a matter of fact.
Great. And I know that I've heard people worry that the lender owns the home when you get a reverse mortgage. Can you shed any light on that misconception?
Yeah, and that's exactly what it is. It's a misconception. Banks don't want to own a home. They're not in the real estate business. You own the home, just again, like any other mortgage. You are on the deed. The borrowers are on the deed. You will own this mortgage and live in this home just like you would if there was any other note on that home. No difference.
Wonderful. Thank you. So, does the borrower have the ability to borrow with a reverse mortgage only if they own the home free and clear, or can they still owe some on their mortgage?
Yes, so you can still owe on your mortgage. We're looking at approximately 50%, and it really depends on the age of the borrower, and we'll take a look at that. Anywhere between 35 to 60%. As long as you have pretty good equity in the home, you can still do it, and it's still a great option for somebody who plans to stay in the home for many years to come, up until the end, to go ahead and use those funds as a supplement to their retirement plan, or have available equity into cash to use in retirement age.
Okay, thank you. Now, they say two things in life are certain: death and taxes. Can you tell us what happens when the borrower or the borrowers do pass away? What happens to the home then?
That's a good question. So we always try to involve the family in anything we do to make sure everybody's on the same page. When that point comes, when the last remaining spouse no longer lives in the home or passes away, uh, the loan becomes due. So the heirs would have first right to buy the home. So they would either refinance or pay off the mortgage. But most of the time, when there's heirs or multiple heirs, it's best to sell the home and then divide it out per the will of the parents. So yeah, it's you live in it till you're no longer living in it anymore, and then it becomes due just like with any other mortgage. It needs to be paid.
Okay, thank you. That makes sense. Now, I heard you mention before, and I've read it in the literature too, you have to make sure you're still paying your taxes and insurance. But I've also heard that some people kind of forget that step, or maybe they just missed it in the instructions. So what would happen?
Well, just with any house that you have, even if it's fully paid off, if you don't pay your taxes, you can face foreclosure. So yeah, we definitely stress paying your property taxes and paying your insurance with this type of mortgage. Um, just best position. I mean, it frees up income for them to save up for that. And there is options to have almost a escrow account similar to an escrow where it's paid out of it. But usually, as long as the credit's good and on-time payments have been made, we don't go that route. There are some circumstances where it's requested, but typically we leave that more equity available for them to use and pay the taxes and insurance out of pocket.
That makes sense. I know a lot of people are used to having that rolled into escrow. So would that be their choice, the borrower's choice, or is that something that a lot of factors play into it?
There is a lot of factors. As long as the property taxes and the mortgage payment is on time, even if they had a couple lates on credit cards, we're still good. But if they're late on the property taxes and there's not an extenuating circumstance to prove why that late happened, then we'd probably lean towards the escrow type account.
Gotcha. That makes sense. Now, you can use this for a purchase of a new home. Can you also use it for a refinance?
Yes, definitely. So the purchase is a fantastic option for somebody, and there's really infinite amount of different options specific to the buyer's needs. But yes, to refi and stay in the home, we work with a lot of financial advisors, and if you take the mortgage payment out, we're seeing 8, 10, 15-year swings in their portfolio longevity, but taking away that mortgage payment really positions them much better for retirement. They're pulling less from their assets and allows it to grow more and last longer.
Okay, thank you. Now, I was reading about that reverse mortgages are backed by the FHA. Is that significant? What is the significance with that?
Yeah, so this is a non-recourse loan. That means if the loan balance ever exceeds the value of the home, the lender doesn't get it from the borrower. The house has to make that payment. If the house can't make the difference, the lender will go to FHA to get the difference, and that's in the FHA Mortgage Insurance Fund. You do pay a premium to that fund, but it makes it the non-recourse, and we couldn't do these type of mortgages without the backing of FHA.
Okay, that makes a lot of sense. Now, I've also read about borrowers needing like a counseling session before being approved for a reverse mortgage. Can you just shed a little light on what purpose that serves?
Yes, that's a good question. A lot of clients ask me, well, why do I have to do this? Is there something wrong with it or something? And I said, no, it's really another protection mechanism put in to make sure they're doing this on their own free will and nobody's forcing them. And the example that I've gotten from counselors is if it was a 98-year-old mother that, maybe didn't do too much talking in the counseling session, and the son did, that may be being forced on by the son. I mean, those are situations are few and far between, but it is a protection mechanism within the mortgage to make sure they have received all the information which we provide, and they're ready to move forward.
Okay, so it really sounds more like a benefit, an added benefit
Right.
to them.
Definitely. Yeah.
That's great. Maybe we should all have certifications before we get any mortgage. That might help everyone.
It could, yes.
And now, we have pros and cons to everything in life. That's just a fact. Can you tell us any downsides to a reverse mortgage as opposed to a traditional mortgage?
Well, I can definitely tell you reasons why it may not be the best option for you. If this is a short-term move, so if you're buying a house or you want to refinance and you plan on moving 1 year, 2 year, 3 year, maybe even 4 year, it may not be a great option. Now, there are circumstances where you have to do it to stay in the home. Like I said, there's infinite ways this thing works and helps people out. So the short term, if you have somebody that spends money, a spendthrift, we can set it up to where that's not as an issue, where they can have stuff gradually come to them. But other than that, I mean, the facts are the facts. We can show you the numbers. It's obviously the client's decision whether or not to move forward. And that's the negatives. Do you have anything to add?
Well, no, I think that, again, it goes back to the education, and that's really the biggest paradigm shift that has happened with this program over the past 10 years, is really getting the word out of the positives and the negatives. But I think that one of the biggest positives of this program is we're changing the lives of retirement aged clients, home buyers that need this positive change, or are using this for a safety valve for other tax purposes or what have you. This is not known as the last resort loan anymore. Right. Matter of fact, we want to educate as many as we can, even prior to the age 62, so that you're prepared for it. But I guess what it really comes down to is that there's a cost for everything. And, one of those myths are, oh, the cost is too high, you have to pay that mortgage insurance. First off, that mortgage insurance is basically rolled into the loan. But what is the value of never ever having a mortgage payment obligation again until the very end, or when you sell that home? That could be $1,500, $2,000 a month more in the pocket of a senior in their last chapter. That could help them in many different ways. Long-term care. It could help them with renovations to a home that may need to take place, sickness or illness. So there's a lot of positives. And for every positive, sometimes you have negatives that come along. But we make sure that we do the right education. And it's having the passion on how to change the lives in retirement age and educating professionals like yourself.
Yeah, I think the education piece is so important to people, because so many people jump into something they don't know what it means.
That's
so
right.
I really think that's an important piece.
Yeah, very, very, very true.
Now, you've kind of alluded to this a little bit, but can you share with us who the ideal client would be? Who would a reverse mortgage be perfect for? What would be their situation, their background? How is it going to help them achieve their goals?
Another good question, and a lot of answers to that. So ideally, I mean, the biggest swing that I've seen is somebody that's house rich and looking to move. So let's say they have a $500,000 house and they're selling it and looking to downsize or right size. So they take that money, they could buy a $500,000 house, they could buy a $400,000 house and pay cash. But let's say they don't have that much set aside for retirement. So let's go find them a $400,000 house, and they, depending on their age, let's say for this example that they put down $200 with the HECM to purchase the home. So now they have a home, $400,000 house, no payments, and then $300,000 left over from the sale of their house. That drastically changes their financial picture and retirement for the better, I would think. Going from zero to 300,000, seen that many times. Somebody that's still making a payment, getting rid of that mortgage payment is key when they don't have to. Like Neil said, freeing up that monthly income to live life and enjoy life better, and puts them in a much better position. And then those buyers who may have good income, and specifically for the realtor community, but we do a deeper dive. So if we can get in front of them, we can find out what will happen in the future if something should happen to a spouse.
Right.
And I use the example a lot, with these different type of incomes coming on, maybe they're life only. And if one spouse passes away, income can be reduced 50% or 2/3 I've seen. And if you have a mortgage payment, you're left with, $300 or $400 after the mortgage payment in a month. and that's going to make it difficult for
Right.
anybody. But if you were in and using the HECM with no payment, no matter what happens to the other spouse, you're protected. A lot of folks in this age frame like to make sure their spouse is going to be protected, and this is a great way to do it.
Yeah, I do want to dovetail a little bit on that. That, there is one other really good benefit right now with this program, and it really hits home in this current market that we're in here in the Carolinas, let alone in the United States. And we understand there is no inventory. And we don't know what to expect in months, years to come on getting back to a level of having good inventory or a good stable amount of inventory. And one of the statistics that resonates because it keeps on changing every single month, year after year, and increasing. There is currently $8.2 trillion currently in senior housing wealth in equity. That means there's that much home equity in these homes amongst seniors. And now, if we took a percentage of that, how many of them need to or want to downsize, upsize, or right size? And with the proper education with professionals like yourself and to the consumers and the financial advisors, we can take housing wealth and create a stable and better lifestyle for these seniors. And at the same time, we can create inventory to those two-story homes or non-conducive homes that they are currently living in. But it's going to take one loan, one advisor at a time to really get the truth out there on how positive this program really is.
That's great. Well, thinking about a borrower coming into your office for a consultation, what questions should they be bringing in to be asking you?
Well, it really depends. A lot of folks will already have done the research and they have the questions. They know maybe some negative things that they have. So when they first come in, I said, ask your questions up front. Let's go ahead and address any issues that you have and address some of those myths that we had kind of discussed about earlier. And then there are some more myths that are out there that folks may have heard. And then really just diving into what the program is, how it may have changed from when they heard those things, and kind of just seeing the numbers and how it all works, and then letting them make a decision.
That makes sense.
Yeah.
Now, let me give you a chance to talk a little bit about Fairway. Why should our viewers be looking at Fairway as opposed to someone else for their reverse mortgage?
Yeah, I would love to. Being I'm the newbie in only 2 years, we have people that have been 20 plus years in our company. First off the bat, we are a employee-owned company, and there's a major benefit to that. We are 10,500, I think it is, employees strong since 1986, if I remember correctly, and we have grown drastically. We're number one in the FHA HECM for purchase lender. But I think that what really differentiates us as a lender is, we have 10 core values, and we continually discuss these core values with our CEO since we all own a piece of this company. But the number one core value is humility first. And we have to put that number one on our list, and that's our client and our partners like realtors and financial advisors. What do we have to do to help in our community and our partners to be more successful? Our wealth and our win, which we earn, will come in the long run. We're local. Specifically here, we are very close to any homeowner here in the Carolinas. Derek is licensed in North Carolina, in Atlanta, in Georgia, and as well as in Florida. We're on a call on a continual basis every week with our CEO. And I think what really changes who we are is if, God forbid, we have an issue with a loan meeting a closing date, our CEO of the company, 10,600 employees, will get on the call with Derek.
Wow.
To figure out what do we have to do to make this right. So service is very important, and servicing the customer, not at the time of closing, but even after. Derek is contacting his clients. We're all contacting our clients a year or 2 or 3 later to see what do we have to do to continually help you in your next chapter. So we're not running after an application. What we're doing is specifically in our department is running after how do we change people's lives for the better, specifically in their retirement. And I'm proud to be part of this family. I really am.
And I am too. I'd like to add to Neil's great comments there. My clients, I tell them at closing, you hired me for life. So anything that ever comes up, you're welcome to call. So we're not the, get you through and get you out and we're done with you. We're here to help support and manage. And then in the time comes at the end, we're here to help your children figure out and go through that process with the sale. So we're here. We're not just a, thank you very much, see you later. We're here for life. And you'll see that as you meet with us and talk with us about it.
That's really reassuring. I know as a realtor, I see so many people who they call them like, you don't want to say that they're kind of orphans, but they get sort of orphaned after the deal closes, right?
Right.
Their realtor leaves, their lender leaves, and that's the end of it. And I think it's very reassuring to know that, especially that when the time comes, you're there to counsel their kids. I think that's great.
That's a valid point. I think a realtor, financial advisor, these type of advisors become part of the consumer's family. I have a financial advisor I've been using for 15 years, and he is part of my family. And I'm sure it goes the same with you and your clients as a realtor. And that's who we are at Fairway. We want to be part of their family, help the generations to come that are in that family with what we have to offer to change their lives.
I love that. Is there anything else you guys want to share with our viewers about reverse mortgages, about yourselves?
Sure. We're not high pressure. I don't know if you can tell from this video, but at least I'm not. So if you have questions, give us a call. We'll look at your scenario. We're not going to push you into it. I think the benefits will show itself if this product works for you. And it is what it is. If you want to do it, we'd be happy to take care of you. And if you want to wait, that's fine. So you're not going to be pressured. Get your questions answered. At least learn the actual facts about the product and how it may benefit you. And if it's right for you, we're here to help.
Yeah, and I'll even add to that when it comes to the new construction side. I mean, this is an absolutely beautiful community here at Eastwood Homes, and this is a restricted 55 plus active adult community, and they have some great product. But not to take away from that, it doesn't have to be a restricted active adult community. Seniors, when you get to this age in life, it's a main floor or a master on the first floor or a one-story living home, but it could be any type of a neighborhood, new or pre-existing. And this product is for most, but it's not for everybody. But I think that if you can dismiss the myths, learn more about the truths, and I think that the positive would truly outweigh that minimal part that may be a negative because it just may not be right for you.
Thank you. Derek and Neil, I want to thank you for being here today. I know I personally learned a lot about reverse mortgages, and I know that our viewers have too. So I appreciate your time.
Thank you for having us.
Thank you so much.
So thanks guys for watching. If you have questions about this video or about anything, my number is on the screen. Please feel free to give me a call. You know I'm here for you. Thanks so much for watching, and I hope we taught you something. Bye.
See you later. Bye.